Good evening, everyone. Andy Moss here, tradingadventures.com with your Thursday market update after the close Tuesday. In the last update, we looked at the SPY testing the rising 5-day moving average for the first time in quite a while. Yesterday, we saw a bit of recovery, and today we're back to that test again. And so the market is it's not broken, it's not rolling over, it's not falling apart. It is correcting through time so far. We've got 5 days of action right in this area, and we can see that this 713 roughly area has been a place for it to kind of hit the brakes a little bit. So we're back to a test once again of the rising 5-day moving average. Prices are below that right now after a fairly sharp sell-off earlier in the afternoon. And so what that tells us, again, it's not rolling over, it's not falling down, it's just simply losing some of that upward momentum at this time. And as these tests become more frequent and closer together, as we know, the more times a level of perceived support or resistance is tested, the more likely it is to give way. And so we see the 5-day here at 708.87. The 8-day is over here at 704.83. It is caught up to this lower shadow on the daily candle here. And so that's why I say the prices are correcting by time, not by price. The sell-off down to this area around 695 would still be my preferred, most choice pullback scenario to buy a resumption of strength. As always, the market doesn't care what I think is best or most ideal. That's just one possibility to consider. The 21-day and the 50-day are together here down around 676.50 and still quite a ways under price. So if we consider all of the different factors, the prices are still a bit extended here given the recent run. And so a little more time correction or even a slight dip back down to that extension level I just noted wouldn't be surprising. Not calling for that, but just saying that's a possibility that is worth keeping an eye on. Qs are still above their rising 5-day moving average. They tested it here and they tested it here, and now they are above the week-to-date anchor, the rising 5-day, and gaining a little steam back here in the after hours, possibly due to an earnings report or some kind of headline. Who knows? It could just be runoff at the end of the day as well. So they're progressing and trying to make further upside here, but maybe some early indications that the steam or the wind is coming out of the sails just a bit there on the NASDAQ 100. Dow stocks, same scenario, just not at all-time highs. They're stuck in this, I shouldn't say stuck, it's only 5 days, but they're back in this gray shaded area, 490, 495. That's a level we watched very closely back in the first part of the year, and they are below a rising 5-day moving average. And same with IWM, although it did make new highs as we've covered before. And this is the area here, 269, 270 would be, and as I mentioned on Tuesday, since the IWM seems to kind of do its own thing sometimes, an undercut of this level as the 21-day average catches up would be a pretty decent scenario if that were to hold and send prices back to the upside. Could be a decent entry opportunity there in days or weeks ahead. Bitcoin continues to hold up, climbing the rising 8-day moving average. A couple of tests in here that got resolved back to the upside and doing pretty well. So Bitcoin is on firmer ground here over this recent high, over the year-to-date anchor, over the 8 and 21-day moving averages. So the next area of reference on the upside is, there could be a little bit of price memory here on this long tail down, and there was a little bit of memory here just below that level. We could just drag this over for a visual reference, but the real areas of interest above are this VWAP anchored from the high back in October, and then of course that's the main anchor, or the main level of interest there. Volatility ticked up a little bit as the market ticked down, but still below 20, not really going anywhere. In the overseas markets, feeling the pressure similar to the U.S. stocks. And once again, we can look here, got back into the area of this recent price action at around 75, and that's where it hit the brakes for a little bit. So not really surprising there on the all cap world US index. Bonds not doing much here, chopping around below the moving averages, and crude oil is still on its way back up. 3 large candles here in a row, back above the 8-day, testing the 21-day, but still really in the middle of this big range from around 78 to 115, 118. It's right here below 100. This is the month-to-date anchor on crude oil futures here, and so that's a level that it can near back in early April, and it's doing so again today. So if it could get over that and digest a little bit, and then maybe come back and retest that, we could see more upside there in crude oil. Gold, get back to the daily charts here. Still stuck in this range. Silver, not doing much either. So a couple more things. The semiconductor index, just incredible strength, continues. Just a slight blip here this afternoon on that sell-off that started around 1:30, and a decent bounce here this afternoon and right back to highs in the aftermarket trade. XBI Biotech coming off a little bit below the 8-day moving average, but certainly nothing out of the ordinary after such a strong run. And the Mag 7, which names that have been leaders on this move higher, as well as the semiconductor index, really holding up here very well so far. Same kind of action, 5 or 6 days here of time correction below a now flat 5-day moving average, and so we might see some movement back down into, this would be, and this is a little messy down here, but on the mags as a group, 62 to 63.30 would be the level that I would watch first on further decline there for MAGS. XLF financials, we noted the resistance coming in at the flat to slightly declining 200-day moving average there. That has sent prices back lower and now testing some levels down here. And the XLE still continuing to climb, but facing a rising 50-day here from underneath. So there's your major market indices and areas as a recap, as a rundown. And the story continues to be the same. It's not broken. It's not rolling over. It's not crashing. It's just lost some steam on this incredible move higher that we've seen over the last 2 or 3 weeks. And that is absolutely normal. So what we want to see now is, can it continue to correct by time and move sideways as the moving averages catch up? And then can it get back over that 5-day? Does it get things sorted out before the 5-day moving averages start declining too much? We go to the roadmap. These will be the things that we watch. We've got reference points below on SPYs and Qs. Here's that extension level, 626, roughly speaking, on the Qs, and 694, 694.50 on SPY. Those are the levels that I have my eyes on first, if we should continue further. And we just see that this is the level above. It's to make new highs, and to break out again, we're going to have to get over roughly 712 to 713 on the S&P 500. So keep looking at your multiple time frames, keep raising your stops up underneath as opportunities allow, and keep protecting gains that you have and managing risk. We'll keep the updates coming, see how we finish out the week tomorrow.